Very impressive numbers. Income up by 142%,
Yes.
Profit after tax 160%. How do you do this?
I think it's just a consistent application on the sticking to the strategic plan
Right.
and execution. We had a clear strategic plan. We had tied to that plan very specific numbers on return, on asset growth,
Right.
on cost ratios, and I'm pleased to report that we are on plan. The numbers we reported are right on strategy.
Right.
Yeah.
When you look at these numbers, obviously, and conversations about Centum in East Africa, people always say, these guys have invested in everything. Talk to us about the wisdom in your portfolio, because I'm looking you in financial services sector, FMCGs, energy, and more recently QPE.
Yes.
What informs this?
We've taken a very deliberate strategy to identify the sectors that we're going to focus on, and we've identified 7 sectors which in our view are going to be critical to the growth of the economy. Now, for you to have record consistent investment returns, you need to be in sectors that are relevant to your economy. So the demand for power goes without saying. We're currently involved in the development of at least 1,100 megawatts of power. It's half of the current installed capacity, and that will remain relevant for a long time. Besides power, we've been investing in real estate. This time we began 4 years ago. And real estate, what you're looking at is backing the trend around urbanization, creating new urban nodes. Our flagship project is the Two Rivers project, sits on 100 acres. We're finishing construction of the first phase at the end of the year, which is a mall. Two Rivers is a city, and it's a first, I would say, privately built or developed city in East Africa. It's an urban node that's going to compete with Nairobi CBD, with Westlands, with Upper Hill, with any other urban node, with a mix of uses. We made significant investment in infrastructure, in the top buildings. We brought on board other third-party investors.
Right.
Our third area of focus is financial services. So within financial services, we have a significant player in the asset management business. We invested in 2 registered fund managers. We in banking, in insurance brokerage. The 4th sector is manufacturing for fast-moving consumer goods. Again, in a growing economy, there's a demand for FMCG products. Within that, you have our investments in Coca-Cola, recently now in Carlsberg, and other consumer-oriented products. Then just quickly to mention the other 3 that we're focusing on and will be developing shortly. It's healthcare, education, and agribusiness. Okay. So those are our areas of focus.
We saw the exit of Centum from UAP Insurance.
Yes.
It was a strategic investor. And also, almost in the same breath or earlier than that, we saw you getting into K-Rep Bank. What's the value of K-Rep Bank for Centum?
So first, we've always had an interest in acquiring a controlling stake in a bank. And that opportunity presented itself in K-Rep. It's a fantastic bank. It is a nationwide branch network. It has 36 branches. It has loyal customers. It is very profitable. In fact, it's in the top tier when it comes to return on equity. It's a bank that, in my view, is easy to really turn around and grow quite significantly. So besides the acquisition, we have a 67% shareholding. We will be injecting additional capital. We had plans to inject additional capital in any event. And the idea is to grow it to a tier 2 bank, and for it to be a leading bank focused on SMEs, and for it to also leverage the synergies that exist within our group. Right.
James, you've made some very bold claims, just going by a lot of the information that Centum has put out, that if you invested a shilling a couple of years back, it's what, 7 point something. And the shareholders for Centum seems to be a very integral part of your business and growth strategy. What sort of assurances do they have? Because obviously they're happy now, and it's going to cause a lot of ripples, and people will be saying Centum is the next company to buy for. What sort of assurances do they have in the long term?
We work ultimately to create value for our shareholders, and that's something that is very clear in my mind. And 6 years ago, we came up with a strategy where we announced a 0 dividend payout policy. We've not paid a dividend for 6 years, and the idea was to reinvest that capital, because we believed we had superior investment opportunities compared to what was available in the market then. 6 years down the line, on book value, we've generated a cumulative return in excess of 400%. The market is at 80%. That has been translated into an appreciation in the share price of the company in the stock market in excess of 600%. Looking at where the business is today, if we carry on doing what we're doing with the infrastructure we've built, with the foundation that we have, I believe the next 5 years should perhaps be more successful than the last 5.
Right.
Yes.
We're looking at a share price of just about, what, 63 as at this hour?
63 shillings, yeah.
Right. Looking at your crystal ball, where do you see this going?
So this is what is in my control, and this is what we focus on as management. Is we have a balance sheet and we have assets that shareholders have entrusted us with. Our focus is to generate a return annually on those assets that exceeds what the market is offering. Over the last 6 years, we've averaged 33%. Last year was 39%, the results that we've just announced.
Right.
Our focus as a management team is to deliver at least 35% year on year for the next 4 years. Now, we believe if we consistently grow the book value of the shareholder wealth, it will be translated into an increase in the share price.
Right.
So as long as we keep on doing what we are doing, that performance should translate into an improved share price year on year.
Right.
A year ago when I sat here, the price was perhaps 32 shillings. Today 63 shillings, and there's still significant demand.
And obviously a lot of room for growth.
And there's room for growth,
right,
because what we have to focus is not to manage the share price, it is to manage the business, and the share price will reflect what is happening in the business.
Right. Looking at your areas of investment and rapid expansion, one wonders what goes into your R&D? What sort of investment, monetary or otherwise, have you put in there?
So we do several things. One is clarity of strategy. You know, we had our first 2009-2014 strategy. And when we developed that strategy and approved it in February 2009, we did not change it. We did not even change our
so it was allowed to run the course.
Quantitative targets.
Right.
Because the most difficult thing in running an organization is to get engagement. So once you envision, you then need to get engagement of the team and to execute. And to execute, you need to give it time for you to pick up the momentum. So creating a stable environment is very important, and that's what we achieved. In 2014, we've come up with a strategy with the targets up to 2019. We put in a lot of thinking in the initial phase, which is thinking through it. And we worked with an organization called Dalberg, which is one of the leading organizations in the continent in terms of developing our strategy. We have capable individuals who are then engaged and appropriately empowered to execute.